Welcome on stage, Lubomir from CoinsPaid.
So today I want to tell you a little bit more about what CoinsPaid do and how you can use it in your business. So basically, if you invest in companies that sell online or they have a point of sale, you are already in payment business. But in payments, margin hides in rails. So basically, what's happening for last 18 months? There was a additional regulatory clarity and global adoption of stablecoins. Think about stablecoins like digital dollars, digital euros that runs on blockchain rails. And they are accessible globally. They are instant payments, and they are 24/7. And basically, with the regulatory clarity, what we have for this last 18 months, we have a Genius Act. It's a first US federal framework that was created in July 2025. And we have a MiCA regulation in Europe that was adopted in June 2024. So basically, adding crypto payments to your businesses, it's now friendly by compliance and also very cost effective. So why crypto and why stablecoins? So what we have here. So first of all, lower processing costs if you are comparing to cards, especially cross-border. Secondly, you have a faster settlement. So basically, think about minutes or even seconds, and now 1 to 3 business days. Fewer chargebacks, regulatory clarity, and also like global customer reach when you have global wallets. What's broken in today's fiat rails? So first of all, what I was mentioning previously, fees eats your margin. US merchants paid more than 200 billion in card fees, processing fees, in 2024. And it's 10% more than a previous year. So basically, this is the largest operational cost after labor and rent. Secondly, you got a slow settlement. Most merchants see money in 1 to 3 days. And think about that like a working capital for your business or business of your companies that you invest. And also, chargebacks and frauds are escalating. And previous year, more than 34 billion in chargebacks were like cut as losses. So basically, what's working in stablecoin rates? Let's compare. So basically, costs are measured in cents, not in percentages. Let's say you choose Solana or Base, that's Ethereum L2. So it's just a fraction of cent comparing to percentages in fiat rails. Also, we have near instant settlements, 24/7, 365 days. No batch windows, no bank holidays, and large networks already run this live. Now, the scale is real. It's not a pilot. So basically, let's say about Fireblocks. It's infrastructure used by banks and PSPs. It's processing almost 15% of global stablecoin volume. So that's near 35 million transactions a month. And also, we have in stablecoins programmability, and this programmability can reduce disputes. And that's where CoinsPaid comes in. So we, like a company, process billions of transactions with over 800 businesses worldwide. For the end user, it's as simple as clicking for the button paid in crypto. For the merchant, it's instant settlements in fiat or stable coins. And also now we have compliance ready, and we have zero volatility risk with stable coins, of course. What I mentioned about regulatory green light. So the main thing that we have when making transatlantic or cross-border payments. So we have in United States Genius Act. So this is first federal regime for payments in stablecoins. It have all the audits, it have full reserve banking, licensing, etc. And also we have MiCA in European Union. So basically we have now a clear compliance path to add stable coins along fiat rails. This here is a highlight if we can compare cards to stable coins. So in cards we have 2-3% fee. Also, we can have sometimes fixed fee. In stablecoins, it's just network fee, whether network you choose, but it's like a fraction of cents. Settlement speed. In cards on bank rails, you have T+1, T+3 business days. In stablecoins, seconds to minutes, 24/7. Chargebacks, 0.6 to 1%. Stablecoins, push payments. We have only disputes when it's policy-driven or needed in some cases. Cross-border, FX, scheme fees, corresponding hops. In stablecoin, same token globally. Availability, business hours, batch window. So basically, stablecoins has no business hours. They don't have holidays, and they are always on. So we have compliance and licensing, Genius, MiCA, operational risk, and we have also, like in any rails, abuse exists. But the answer for this is regulated tokens, KYB, KYC, and screening. Let's see quickly if you have a portfolio SaaS company doing 20 million in global sales, and 51% of that is cross-border. If you shift only 20%, it's about 4 million in volume to stablecoins to low-fee rails. And with a markup of 0.205%, if you compare it to cards, you can make 2% roughly on 4 million. So it's 80,000 a year, and that's not even counting that you will have instant payments, not waiting for T+2 days. So with Genius Act and MiCA, we have a compliance green light. With Visa and Stripe going live with stablecoins, we have a financial green light. And also, we have general green light now, because it used to be very risky to take crypto payments to understand what's the course of different crypto. But now with stable coins, if you have this in your company, your founders will thank you and your margin will grow. Thank you very much.